And as we go forward, I'm going to say it again, the AI mid-cycle slowdown is basically the peak and the easy money of AI. And so if the money starts filtering back towards the other direction, I've laid out a pretty bullish case for Bitcoin if you haven't got it. If we're overestimating the inflation side and productivity is coming, if we're overestimating the hawkishness of the Fed from what Warsh said, and at the same time, the AI trade is not going to lose its earnings growth. It's just going to make it more difficult for institutions to stay long it the way they have in the past. Then all of a sudden, the lower volatility of Bitcoin will probably lead in. If we get above the 200-day moving average with everything that I just said, which is up north of 70 at this point, I do think that that's going to be the beginning of the next phase of crypto and the next phase of AI. We'll see if it happens in the second half of the year. I think it will.
Bitcoin's recent slump may have less to do with crypto and more to do with one of the biggest capital rotations in modern markets. Jordi Visser is an American investor and macro strategist with over 3 decades of experience in finance, specializing in global macro strategies, market crisis navigation, and the integration of artificial intelligence, data science, and digital assets into institutional investing. Jordi Visser reveals that Bitcoin's disappointing performance this year has been driven far more by macroeconomic forces than by any deterioration in its long-term fundamentals. Early in the year, Bitcoin was caught in the broader sell-off across software and technology stocks as investors grouped it with other code-based assets. The pressure intensified as global capital rotated into artificial intelligence, where chipmakers and AI infrastructure companies delivered extraordinary returns. South Korea, once a major source of speculative Bitcoin demand, became a clear example of this shift, with investors favoring memory chip companies over digital assets. More recently, the country's Ministry of Economy and Finance held an emergency meeting with the Bank of Korea and financial regulators after sharp market swings, underscoring how quickly capital can react to changing economic conditions. Visser also argues that the fading inflation narrative weakened Bitcoin's appeal as a hedge alongside gold. As energy prices declined and inflation expectations eased, markets increasingly priced in Federal Reserve policy changes, adding further pressure to Bitcoin. However, he believes much of that pessimism is now reflected in prices. With AI infrastructure spending expected to slow, Bitcoin's technical resilience, improving macro backdrop, and the potential for capital to rotate away from overheated AI trades could position the cryptocurrency for a stronger recovery once it reclaims key technical levels. Do you think Bitcoin is preparing for its next big move, or will AI continue to dominate global capital? Share your thoughts in the comments. If you enjoyed this analysis, don't forget to like, share, and subscribe for more Bitcoin and crypto insights.
This has been a bad year for Bitcoin with a lot of headwinds, starting with software, which we talked about a lot at the beginning of the year and how it got lumped in with everything that was built on code. Once the software stuff kind of bottomed, you got into what you said, which is complete agreement. A country like Korea, which was part of the energy for Bitcoin, moved everything into basically memory. And we've seen massive leverage and margin debt and everything else. So Bitcoin, which was always kind of the place you'd go to if you wanted to trade beta relative to tech, well, that ended, and everyone now has beta in tech where you can get 10 baggers in the span of a year. But then one other part that I don't think people fully embraced as the last leg, and I talked about it briefly last week with this whole debasement unwind where it got lumped in with gold and silver. The rationale behind that, which is starting to become more interesting to me, and I'm seeing some technical signs finally with divergences, which I'll finish this off with. But I think the debasement trade unwind, there is a direct relationship here between something we talked about a lot and something I was concerned about for really the last 5-6 weeks, but then last week talked about that I'm not as concerned about anymore, was this inflation uptick, particularly in core PCE, core CPI, with energy going higher. Well, obviously energy prices have collapsed. We've seen fertilizer. So you're going to get a negative CPI print most likely for the June number. Already for July, we have a negative number, but I still hear a lot of people going out to macro clients talking about poor core PCE still being elevated. Then you get Warsh in. The second that we went from the Fed effective rate, which is about 3.6, we crossed over that for the December rate of end of the year, meaning they had rate hikes built in. That was when Bitcoin had the last leg lower. I think we've hit the peak of that. I really do. This is where the debate's going to come in. I am much more negative, in my opinion, on the jobs market getting better. And I think that is the difference. I listened to Darius Dale, who you've had on recently and who's a friend of the show and someone I respect, but I respect knowing what he's saying because I know his clients are responding to it because he's had such a good call on things. And I just listened to him post something yesterday where he talked about wage inflation. And I think that's where he and I disagree right now. I don't see the labor market as improving other than the fact that we've had more jobs. Some of this is related to the World Cup, but on the parts related to AI, there is no bounce whatsoever. The business side, the insurance side, all of that stuff. And I think people are underestimating the next part of AI, which is the application layer. The infrastructure side is going to slow down. So I'm just going to tell people technically, we've got some nice divergences finally. We made new lows in Bitcoin, not just from the lows from a couple weeks ago, but also the lows from back in February. And it held in there. We've seen a lot of selling in the Bitcoin ETFs. So I'm more interested in paying attention now. Like I've said, until it gets above the 200-day, I don't think it's worthwhile for people to play on the other side. But I do think the narrative is old. And now I've been able to find something where if the wage side doesn't improve, meaning if we don't get a big change and we get I think any weakness now that starts to show up from AI agents, I think is going to be a positive for Bitcoin. Well, this is where the story gets very good for Bitcoin. So about 4 weeks ago, I talked and I started doing videos on the AI mid-cycle slowdown. I don't think people really listened to me. I don't think they really cared, but these names have been hit pretty hard and they're going through a slowdown. The reason they're going through a slowdown, these headwinds are never going away. So let me rephrase that. These headwinds are never going away. So I think people have to adjust their expectations. And this goes for Korea. This goes for Micron. This goes for everything. We talked about Micron having blowout numbers last week. Stock is down a decent amount since that report. That was the high. When you sell off on great news, that is not a good sign, and you have to dig a little deep. The reason these headwinds or that we're at a point is the headwinds are real. The government shut down one of the models. The Korean models are catching up. We're at a stage where the governments are getting more involved. This is a headwind that people have to understand. If governments are getting more involved with companies, Sam Altman proposed a 5% stake to the White House. I think we're getting back into what Bitcoin was meant to represent, which is when the government gets too involved in the capital markets, in the fiat system, in the ability to make money in these things, which is what happens when you shut down the models, when you slow down. On the data center side, we are absolutely having problems getting data centers in. This is, again, about politics. You've got a lot of people spending a lot of money in these elections. Republican side and on the tech side, they're doing everything they can. We are at a point now where I think people have to realize that AI is a disruptive force, and the models from here only get better. So what I was talking about in the first quarter, we're not going to see that easy trade again. It's not coming. And so the benefits are going to be to the companies that are able to use the agentic side and get their margins up. And we're starting to see healthcare stocks and financial stocks start to outperform the market. And that's why we're seeing this rotation, because tech has been the big winner. The infrastructure has been the big winner. I still think over the next 5 years, you're going to get great returns in these things because the build that is going to happen. It's just not going to be as easy. And I think that's good for Bitcoin.
The easy money in AI may be over. And that could be exactly what Bitcoin has been waiting for. Bitcoin's next rally may not begin because crypto suddenly improves. It could begin because artificial intelligence becomes a more challenging investment. Jordi Visser reveals that the easy money phase of the AI boom is fading as the sector enters what he calls a mid-cycle slowdown. Despite strong earnings from leading companies, several AI stocks have struggled to rally, suggesting investors are becoming more cautious. He believes government involvement, regulatory scrutiny, and infrastructure bottlenecks, including data center constraints, are creating lasting headwinds for AI. Ironically, these developments reinforce Bitcoin's original purpose as an asset designed to operate outside government-controlled financial systems. Visser argues that while AI will continue transforming industries, future gains will increasingly come from companies successfully applying AI rather than those simply building infrastructure. As capital rotates into sectors such as healthcare and financial services, Bitcoin could become a major beneficiary. He also notes that stock market volatility has risen sharply, while Bitcoin has become comparatively more stable. If AI's momentum continues to cool and Bitcoin reclaims its 200-day moving average, Visser believes the market could be entering the next phase of the crypto cycle, with Bitcoin positioned to outperform traditional assets over time. Let's get back to interview.
Well, again, one of the themes that I've tried to help with my subscribers on has been the situation that all these, including the Nasdaq, it's a modified cap weight, so it's not 100% cap weight. They do have limitations, but I do think Nvidia is still a very large portion of it at this point. So it's been pulled back by Nvidia, but it has a lot of names that have benefited from AI. So on the S&P 500, again, as of today, you're probably up about 8%, maybe a little bit less, 8 and change is my guess, which is a little surprising given the fact that earnings are up as much as they are. But I think in the case of the S&P, it is a cap-weighted index, and you suffer with cap weightings in the fact that you're heavily weighted towards the winners of the prior 15 years and you're underweight the losers. Well, if the semiconductors are winning and they were not the winners and the hyperscalers are losing, then you're suffering in that side. I still believe stocks are going to outperform bonds for at least the next couple years until AGI starts to become a little bit more scary. I still believe that commodities are going to be big, necessary, including silver. And I still believe that Bitcoin is going to be the best performer out of all of them once we get to the point that the negatives of AI start to become apparent. And I think they're becoming apparent right now. If the best you can get from the S&P 500 is just a guess, or Qs is 15% a year, well, that's the world that Bitcoin thrives in. If you can get 100 to 1,000%, which is the world we've been living in for retail, which is the energy of Bitcoin, well, then Bitcoin's going to suffer. I think that world's going away. And more importantly, for people that are invested in private credit, in private debt, which wealthy people are in real estate, I think gradually over time, especially when the S&P starts to run into some bigger resistance, the volatility now is in the equity market. I've shown this repeatedly. Remember when Bitcoin was such an extreme volatile position? Well, now when Bitcoin has a big down day, it's down 1.5%. So it's moving on a 30 vol, not even a 30 vol using that. I'm telling you right now, the tech momentum index, the last 60 days is an 85 vol. That's higher than any time over the last 25 years, including the dot-com bubble. Now, a momentum index like that is long short. So that has the winners of tech over the losers of tech. Well, that's the way most hedge funds run their book. When you have an 80 volatility, that prevents you from having much of a position in that because you'd be hitting your drawdown limits very quickly if you had that trade on. This is what's happening in the equity market. And this is not something that people should minimize. In fact, I've shown that over the last year, it's been a megaphone, meaning we're making higher and higher and higher volatility bands as we move forward. And that's going to make it more difficult for people to be long stocks. The Sharpe ratios are going down. And as we go forward, I'm going to say it again, the AI mid-cycle slowdown is basically the peak and the easy money of AI. And so if the money starts filtering back towards the other direction, I've laid out a pretty bullish case for Bitcoin if you haven't got it. If we're overestimating the inflation side and productivity is coming, if we're overestimating the hawkishness of the Fed from what Warsh said, and at the same time, the AI trade is not going to lose its earnings growth. It's just going to make it more difficult for institutions to stay long it the way they have in the past. Then all of a sudden, the lower volatility of Bitcoin will probably lead in. If we get above the 200-day moving average with everything that I just said, which is up north of 70 at this point, I do think that that's going to be the beginning of the next phase of crypto and the next phase of AI. We'll see if it happens in the second half of the year. I think it will.
The broader investment landscape appears to be approaching an important transition. As the extraordinary momentum behind AI infrastructure begins to normalize, investors may increasingly focus on assets offering stronger long-term risk-adjusted opportunities rather than chasing the market's latest winners. Easing inflation pressures, shifting interest rate expectations, and rising volatility in technology stocks are gradually reshaping global capital flows. At the same time, Bitcoin is displaying greater resilience than many expected, with lower relative volatility and improving technical signals despite persistent macro uncertainty. If institutional investors begin reducing exposure to overcrowded AI trades while expanding allocations to digital assets, Bitcoin could benefit from a meaningful rotation of capital. A decisive move above its 200-day moving average would further strengthen confidence that a new market phase is underway. Rather than signaling the end of AI's growth story, this shift could represent a healthier balance across markets, where digital assets regain relevance as investors seek diversification, scarcity, and long-term value in an increasingly complex financial environment. Is Bitcoin about to become the biggest winner as the AI boom slows down? Share your prediction in the comments. If you enjoyed this video, don't forget to like, share, subscribe, and turn on the notification bell so you never miss an update. Thanks for watching.